please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. And on behalf of all of us here, a very happy Teachers' Day to all of you out there. I owe everything I know to some of the most fabulous teachers I have had. And I'm sure that's the experience with the two of you.
Yeah, happy Teachers' Day. I owe a lot to you guys as well. I mean, we learn from each other every single day. So happy Teachers' Day to both of you and to the market, right? The market is such a big teacher for all of us every single day.
Absolutely. Yeah. I wish Anuj and I learn a lot from you.
You know, of course, happy Teachers' Day to both of you. And I think happy Teachers' Day, I would say to everyone, from our parents to our friends to our children, yeah. To you know, our junior colleagues, to everyone. You know, we learn every day. The day we stop learning, we stop growing. Yeah. That should be the motto.
You know, you're very right about the junior colleagues. I think we learn so much from our researchers and reporters and producers team. It's amazing that each day that is the most enriching source.
Oh, absolutely, and we hope to continue learning. And you know, we'll also be speaking to Vetri Subramaniam through the course of the show. And I remember he wrote this piece about how the market is the biggest teacher for him. So, well, let's talk about the markets then. The bears have been flexing their muscles a bit.
I would think, I mean, a bit is perhaps an understatement, especially when it comes to currencies. Yeah. That's where the mayhem has started, and it's spreading to equities as well. And global markets are not giving us too much of a cheer now. But I want to point out to one kind of green aspect, if you please, or one ray of hope. Yesterday, a lot of rupee dealers were saying that exporters were asking, is it a good time to sell? They were asking, should we sell 6 months instead of just 3 months? So clearly at 71.5, people look like are willing to supply dollars. The Reserve Bank stopped supplying it after 71.35 when they found that, you know, this is all part of a global mayhem, and why should they allow anybody to, you know, go away at a higher rate? But the market definitely spoke about, you know, that exhaustion of selling. And therefore, maybe I wouldn't be surprised today if, at least in the rupee, you saw the selling abate. And once that cue comes from the rupee, you would normally see that spread to the bond markets and the equity markets as well. Yeah. Because this is a problem that started in the currency markets. And therefore, if they give us a signal that the selling exhaustion has come, then you could see some peace returning to equity and bond markets. But for that, global markets have to oblige. It can't happen only in India.
Oh, absolutely. You know, and just taking that point forward, this emerging market crisis is real. It may not play out so much in our markets, but I was just looking at the data across the globe. The South African rand fell almost 3% yesterday, and that economy has now entered into a recession for the first time since 2009. So if you look at, you know, just the emerging market ETFs, right? Yesterday you saw some of these key ETFs. The Vanguard FTSE Emerging Market ETF was down almost 2.5% yesterday. It's lost 11% this year. The iShares MSCI, which is tracked very closely, that was down 2% yesterday. And as I said, big recession coming into some of these markets like South Africa, etc.
GDP contracted by 0.7.
Yes, so in the quarter gone by, yep. You know, even for our own markets, there was quite a bit of delivery-based selling in large cap names yesterday, whether it's HUL, Bajaj, Finserv, and these are stocks that have given you great returns this year. Yesterday, 400 crores of delivery selling in HUL, 200 crores in Bajaj Finserv. I think second day running, we're seeing big selling there. So the question we're asking, one, is the long-term uptrend intact, which I think a lot of people believe it is? And two, is the market oversold in the very near term? Anuj, morning. The second question first. Do you think this market is oversold in the near term? Because we have seen a couple of days of a sell-off.
Morning, Sonia. The day to sell was the day before, like we pointed out, perhaps even yesterday. Let's have a, you know, some 60-70 point Nifty rally today. Because look, the SGX Nifty is indicating we'll have a gap down. First of all, I don't think that will play out. Just look at the numbers yesterday. Who was selling? You know, the FIs is plus 33 crore, DIs is minus 21 crore, net is plus 12 crores. And if we're looking at the market, it's almost as if there's a collapse playing out. Nifty was down 62 points. That's not even worth mentioning, of course, because there were other problems. Mid-cap index down 540 points. Nifty Junior down 1,000 points. From peak greed last week, when we were talking about put-call ratio of 2 to high fear. I won't say peak fear yet, but from peak greed, we moved to high fear in just about 1 week. Put-call ratio down from 2 to 1.45. I think the big cue today this morning is Brent is down from 79 to 78, and now in fact sub 78. And if I take Lata's point on rupee also on board. Yesterday we were a combination of 79 on Brent and 71 half on currency. Today, can we look at a combination of 78 on crude and 71 on rupee? That I think changes a lot of things. And this market is not at all-time high. This market has now fallen. It's corrected to 20-day moving average. It's all about risk-reward. Risk-reward favored you to take a short position for last 2 days. The risk-reward favors you to try a long position today with perhaps yesterday's low of 11,497 as your stop loss, give or take 15-20 points thereabout. The bank Nifty's yesterday low also coincides with the 50-day moving average. The trade that's played out beautifully is to short banks and long IT. That trade just for today could reverse. Today you could see profit taking in IT, in pharma, and perhaps some money could move to banks. There was heavy put buying yesterday from FIIs. If they don't get follow through, they would be forced to cover. So my call for today is that today is a day of a short covering rally. Now it may not mean too much in the intermediate term. I still believe the high for the month may have been made at all-time high, but because the market is oversold on the absolute near-term charts, today is a day that you want to actually buy some good quality stocks which have fallen a lot and see. I mean, the rest of what favors you. Yesterday's low is gone. And decisively respect the market and you get out of the market. Otherwise, today is not a day to try a short trade. That time has come and gone. Today perhaps is a day to try perhaps a long trade. Now, if that long trade also reverses, we'll find out. But let's take it each day as it comes. For today, I think the way crude has fallen and the way currency market could recover, I think that would have a big impact.
Tumhare muh mein ghee shakkar, Anuj. If it plays out that way, if that was a sure short game, then we should have seen a bit of a recovery in the Asian markets, which we are not yet seeing. But I still take your point that we are way more vulnerable to crude than other Asian economies. So we could be an outlier today. But I'm still keeping my fingers crossed. It appeared like there was exhaustion, but the rupee has still closed at the lowest point, which means at the moment of closing, there were more sellers than buyers. And at the moment of closing in the bond markets, there were more sellers than buyers. So, we are still keeping our fingers crossed.
Absolutely. And we shouldn't cheer on crude just yet. There's a big tropical storm, Storm Gordon, hitting the Gulf of Mexico currently, and there are expectations that could really hit supply quite a bit, disrupt supply quite a bit, and crude could surge once again. So just keep an eye out on all those developments. For now, the SGX Nifty, some of the Asian markets are still slightly sketchy. Let's see how things play out today. Let's take a look at what our wise experts have to say as we head into trade this morning. Neelkant Mishra of Credit Suisse says there is significant overvaluation in consumer staples at a time when consumption growth must fall to bridge the balance of payments deficit. He says they therefore cut 1.5% from staples from their model portfolio, and Credit Suisse India downgrades HUL and Britannia today. They add weights to utilities, which are now at a record discount to the market and to energy, which should benefit from a weaker rupee. So, this is the increasing view that a lot of people have, that consumption now has played its part and there could be some slowdown underway. Perhaps that's why you've seen HUL fall 2 days running.
Oh, yes. For these and other reasons, definitely. But let's get you money market views as well. Pramit Brahmabhatt of Veracity says the rupee is likely to appreciate today, as he expects some RBI intervention. He expects spot USD-INR pair to trade in a range of 71, 71.50 for the day. So that's again a voice of hope.
Okay, and on the bond market, Dhaval Dalal of Edelweiss says the bond market sentiment softened in the last few trading sessions amidst a faster than expected depreciation of the rupee against the dollar and further hardening in crude oil prices. He says although headline inflation looks benign at the moment, market participants have begun to talk about prospects of a more preemptive rate hike and the second half borrowing calendar. He expects the 10-year benchmark bond yield to settle in the new 8 to 8.25% range after the recent weekly close at 8%. That said, he adds, RBI's much-awaited OMO purchase could enthuse the market participants and could bring back the much-needed positive sentiment in the bond market.
Okay, US market, of course, resumed trading after 1 day of holiday. Here's Nigel with the world view.
Well, history suggests that the US markets don't do very, very well in the month of September, and they started off the month, in fact, on the back foot. But those markets, they did come off the low point of the day. So the Dow ended more or less flattish by the time it did wind up. The big movers, though, in terms of the Nasdaq, was really Amazon and Facebook. Facebook was under some pressure, a couple of brokerages downgrading their target price out there, while Amazon joined the $1 trillion group. Remember, that's only the second company after Apple. So both those two together, $2 trillion, well, that's almost equal to all the market capitalization of all the BSE listed stocks. Moving on, though, US manufacturing data, the PMI data rose to around 61.3. That was much better than what the street was working with. It got a thumbs up because new orders, in fact, did result in a sharp boost out there. European markets, they came in for some selling pressure, all the three frontliners ending in the red. But the commentary coming in from Argentina as well as Turkey was something that the markets were focusing on. In terms of Argentina, we had the Argentinian president saying that they're going to be levying some emergency measures, talking about cutting spending in the government and also including new taxes. So that was something that played out yesterday. While in fact in Turkey, they're talking about, another rate hike in the coming central bank meetings. We'll keep an eye out on that front as well. Emerging markets ended in the red. Both the Brazilian and the Russian index did see some selling. And Asian markets, on the back of those trade war fears, they in fact are trading in the red as we speak. We're pointing out on Brent crude prices, a bit of a cool off because we saw the stockpiles rise in Oklahoma, and that's what really resulted in some kind of profit booking on Brent crude. The dollar index, though, some strength overnight. For starters, the SGX Nifty is indicating we'll likely start off on the back foot, a cut of around 25 points.
Okay, thank you very much, Nigel, for that. Well, the big story for our market remains the rupee weakness. And, of course, because of that, some macro headwinds. Nick Parsons, the head of research and strategy at Thomas Lloyd, joins in with his take. Nick, good morning and thank you very much for joining in this early. Well, the rupee has been falling. It's lost, I think, about 5% in the last 2 or 3 weeks. Is this an India problem that's worrying you, or is this entirely because of the EM turmoil?
I don't think it's an India-specific problem, despite the fact that over this last quarter, the rupee has been the worst performing of all the Asian currencies. I would explain it in the following way. India seems to be a victim of its own liquidity. When you have an almost indiscriminate sell-off in an asset class, then investors sell what they can. And what they can sell is the Indian rupee, and what they can sell is Indian equities. Now, of course, they've not been doing that in in the equity market to any great extent, because we still see that the Nifty and the Sensex are the two best performers in the world during the course of 2018. But because the markets have been holding up, investors are taking profits there. They're shielding themselves from the broader pain in the emerging markets universe, and India has been caught up in a wave of indiscriminate selling, which I don't think is justified by India's economic fundamentals.
Okay, Nick, good morning and thanks for being with us on the channel. India's July trade deficit number was very high, and now Indian economists are worrying that the current account deficit this year may be close to 3%. Is this not a worry with foreign investors as well?
It's not a particular worry, because the current account deficit is only going to be back to where it was a few years ago. It's entirely manageable and financeable, and India has still got the highest economic growth in G20. So it's not the case that we've got a flight of foreign capital. It's not the case that investors are unsettled by India's macroeconomic performance. We've got GDP growth of over 8%. We've got inflation, which is around 5%. We've got huge FDI inflows into the country. It's not a particular cause of concern. Rather, it is this indiscriminate selling of emerging markets, and India has been caught up in that. And I think this is going to offer some wonderful entry opportunities here.
Okay, Nick, good morning. In that case, are we at the fag end of the sell-off, at least in India?
I don't think we're yet at quite the sell-off in the currency market. When you last kindly invited me onto your show a couple of weeks ago, I suggested that the near-term range for the rupee was going to be 69 to 72. And I remember there were a few eyebrows when I raised when I mentioned 72 as a possible target. Well, we've been to 71.67 now. We're very close to being at or near a turning point. I would suggest that we may just have to wait for the moment at which the EM sell-off makes front page news in the newspapers and becomes the top story on the business programs rather than the second or third page or the second or third story. We're almost there, but not quite yet.
Yeah, well, actually, the rupee has started figuring in the white papers in India. So to that extent, it's become front page. From what you're saying, are you therefore expecting a blowout in the EMs sometime soon?
I don't think we are. And the reason for that is that at some point, we're going to see the changing perceptions around the US economy beginning to feed through into changed perceptions over Fed policy. Now, for the moment, the market is pricing in another 1.5 hikes in rates from the Fed this year and another 2 or 2.5 next year. But it could well be that as we see the worries over world trade, we see worries over growth outside of the US, and we see worries about spillover from non-US equity markets. All those worries could coalesce together and I think have the potential to significantly alter the expected path of US interest rates. And once we start to shaving back those forecasts for US rate hikes, then that, I think, is going to be the catalyst for the turning point in EM. And we're probably not far away from that just yet. It's possible that this carries on for another week, a couple of weeks or so, perhaps even right until the end of September and this third quarter. But I think once we see a change in perceptions on US interest rates, then I think the pressure is going to be off. And then I think we'll start to look a little bit more selectively at the individual currencies. And when the market does start to look more selectively, it surely will ask itself, why on earth was India the worst performing currency in Asia in the third quarter of 2018? Because that simply is not warranted by the economic fundamentals.
Okay, well, before I ask you about the US markets, I just want to get our viewers' attention to what's happening in Asia, because the Hong Kong market is sinking now. Almost a 300-point slide is what you're seeing across the Hong Kong market. And the other markets too across Asia are showing us a shade of red. So it doesn't look like it's going to be a good start for us. But Nick, about the US then, you think everyone is wrong about the US growth continuing? I mean, you know, there have been a lot of people have been talking about the growth towards the end of 2018 as well. But what's your own view?
I don't think they're overestimating US growth. I think they're overestimating the extent to which that will lead in turn to inflation pressure, and that then will force the Fed to carry on raising interest rates irrespective of what's happening in asset markets globally.
Okay, finally, for India, we have two headwinds. Brent oil, of course, we've discussed, and elections this year. Can they spoil the party?
Well, I think the Indian equity market is perhaps a little bit more vulnerable than the Indian currency is. I think the rupee, as we approach 72, offers enormous value. I'm not so convinced at all by any means that the Indian equity market, which is the best performer in the world this year, can continue to sustain these high levels. So I think it's more of a positive currency story than it is a positive equity story from here.
Okay, Nick, thanks a lot for joining us. So the equity markets are more vulnerable than the currency market. That's the word coming in from Nick Parsons. You'll get to hear more of that conversation through the course of the day. For now, let's take a short break. We'll come back and drill it down to the micros. CNBC TV18's top 10 list of stocks when we return. Well, there is a deepening sell-off across the Asian markets this morning. As we said, the Hong Kong market is now down almost 300 points. And across emerging markets as well, there's been, a big sell-off in currencies. The South African rand fell almost 3% yesterday. And the peso as well has lost almost half of its value against the dollar since the month of January. But our research team is here to give you the list of top 10 stocks to track as we head into trade today. Here they are, bright and early. Anuj, what are you looking at?
Yes, Sonia. So, at the risk of having egg on my face today, I think I still believe that despite the way Hong Kong and other markets are performing, the risk reward is not in favor of taking shorts, at least in the first half. Let's see. Two stocks I'm watching out for on green side. One is Balkrishna Industries. Now, the reason I want to point this stock out after the 2-day fall is the 2-year return in stock is 200%. It's fallen 15%, of course, in 2 days. And that 15% correction means it's straight away gone to its 200-day moving average. I ask myself a simple question: why should higher capex be bad for Balkrishna Industries in the long term? And I mean, I don't get an answer to that. So let's see. The other one is State Bank of India. The short PSU bank trade is now the most overcrowded trade, and any stability in money market, Brent crude, can lead to a decent rally. And the stock hasn't still negated its golden cross, the 50-day moving average above the 200-day moving average. So that could be a decent risk reward trade today. Let's see how that plays out.
That's been my bet as well. I also looked at the crude price fall by a whole dollar, and my sense therefore is that that sharp spike in yields that we saw yesterday to 806 will probably recede, and that can help NBFCs and banks recover, because the sharpest sell-off were in those two sectors. Again, we could all have egg on our face. We're just going by that $1 fall. I mean, I'm going by the $1 fall in crude, and the general perception yesterday in the FX market that there are a bunch of exporters who are wanting to sell dollars.
Okay, so we'll keep an eye out on a couple of these banks, these NBFCs. But Adani Enterprises is also on our radar today. Anisha will tell us why. Hi, Anisha.
Hi, Sonia. Good morning. Well, yes, Adani Enterprises will be in focus today as the ex-date of demerger of Adani gas business is tomorrow. Now, analysts peg a value of around 50 rupees per share for the gas business, and the adjustment in the stock price will be seen tomorrow. But as of today, the FNOs of the Adani Enterprises consolidated will expire. Interestingly, Adani Enterprises entered the FNO ban yesterday, so a bit of peculiar situation for the investors.
All right, Anisha, that's interesting. Of course, today all the contracts will expire. Tomorrow, the fresh contracts will be issued. But today, the only thing you can do is unwind your positions because the stock's gone into FNO ban after yesterday's crazy move. So that's going to be an interesting stock to watch out for today.
No, does it rise or fall? I didn't get the idea.
Frankly speaking, with this one, things change every hour. You just see the yesterday's chart, this. I absolutely don't know what's happening here, but that's the kind of stock that we have, of course. Ekta, some news on Spark?
Well, yes, Anuj, they held their conference call last evening in terms of an update with regards to the entire R&D portfolio that they have. So they did apprise the investors and analysts that, they have two of their key drugs, Zelpros as well as Ellipsia, which they are pursuing in terms of opportunities. So eventually, because of Halol and the fact that it now has that clearance from the US FDA, they are expecting it to probably be expedited. We could hear something on both these drugs in FY19, early FY20. And separately, they did mention that they will be looking at their R&D portfolio quite closely in terms of decisions in which molecules need funding and which ones they will actively pursue going forward, even in terms of partnerships. Let's listen in to the management themselves.
Our partner's manufacturing plant supporting Ellipsia and Zelpros has moved from OAI, that is official action indicated, to VAI, which is voluntary action indicated. The shift in compliance now allows us to pursue marketing approval from the Sun Halol plant. This regulatory turnaround is certainly a positive for Spark, allowing us access to additional milestone payments from our commercialization partner and a potential launch in early 2019. Spark has received complete response letters for both these products, citing manufacturing site compliance inadequacies. We have responded to US FDA indicating compliance readiness of the manufacturing site, and that allows us to get back to the regulatory queue with FDA. We have initiated activities related to the possible site transfer as a backup manufacturing strategy for these products. We will continue to maintain some of the preparatory activities, but on a low-intensity mode.
Okay, that's the Spark management. Abhishek back fresh from his holiday. Muthoot Finance numbers?
well, strong set of numbers, and it seems that gold finances are seeing an uptick in the loan growth. So a loan growth at 6.4% quarter on quarter is the highest in last 11 quarters. And even if you look at the YOY basis, the double-digit loan growth is the highest in 5 quarters. The company had opened 92 branches in the current quarter, so their loan per branch actually increased by 9.5% quarter on quarter and about 8.5% YOY. So you look at the asset quality, the gross NPA in absolute value declined by more than 31% quarter on quarter, and in percentage wise, the gross NPA ratio was at 2.85 versus 4.42. So the NII growth at 31%, the operating profit growth at 37% drove the profit growth at and above 42%, therefore sustaining the superior return ratios, ROA at 6.5%, best in BFSI sector, and ROE at 24% plus. Back to you.
Okay, thanks a lot for that. Well, that's on Muthoot Finance, but there are many other stocks that are in the news this morning. Sonal is here to give us that list. Sonal, over to you.
Thanks a lot for that. And it's raining orders for a lot of companies today. I'll start with Goldiam because the company has received its highest ever export orders worth rupees 140 crores. Texmo Pipes also is in focus because of the order that they've received from L&T that values around 81.3 crores, and that is for HDPE pipes. McNally Bharat Engineering has received one order worth 107 crore rupees from NLC India. That is for construction of colony houses in Odisha. LG Balakrishnan and Bros will also be in focus because ICRA has upgraded the rating of the company for their fixed deposits. Expect all these stocks to do well in trade today. Back to you.
Okay, thanks a lot. So here's a quick recap then of our top stocks to watch. Stocks with positive news flow today: Balkrishna Industries, SBI, Nifty PSU Bank Index, NBFCs like M&M Finance, Shriram Transport, realty companies like Soba, Prestige Estates, Spark, Muthoot Finance, Texmo Pipes, McNally Bharat, etc., LG Balakrishna and ICRA. Okay, so on Balkrishna Industries, it's not that there's positive news flow, it's just that Anuj believes that, the stock is sold off quite a bit, so keep an eye out on that. While the lone stock with a negative news flow this morning is Adani Enterprises.
That's volatile one. We don't know which way it's going to really blow. But not stock related, but something which we have always associated with the stock market. The shocker news late evening yesterday. The Singh brothers, Malvinder and Shivinder, are splitting, with Shivinder dragging his brother Malvinder to the NCLT. Ekta Batra, of course, has been tracking Ranbaxy and the aftermath of the sale of Ranbaxy to Daiichi very, very closely. Ekta, just give us the story first.
Well, Lata, the story is that Shivinder Singh has now moved the NCLT court against his older brother Malvinder Singh, as well as Sunil Godwani, who is actually heading the NBFC business of Religare as well as RHC Holding. He's basically accused them of mismanagement as well as oppression, which resulted in Shivinder Singh being dragged along with all what has taken place with Fortis. Just want to highlight that Shivinder Singh had already stepped down from the active management of Fortis Healthcare in September of 2015 when he had joined that sect RSSB. But in the past couple of months, he had taken a hiatus from it. He had come back and he was actively helping in terms of what exactly had taken place with Fortis, etc. But he also mentions in his press release that one of the reasons why he had to break his silence despite keeping quiet for so long was because of all of the media articles which had pointed to the one of the elders in the family who was being accused and being held responsible for a lot of the developments which have taken place in the past couple of months, which has compelled him to break his silence. It's important to point out that while there is no specific name which is named, it is assumed to be the RSSB head at this point, who is also their uncle and who Shivinder Singh was a part of in terms of the sect. So maybe there are multiple reasons which resulted in this. But if you just go back to Feb of 2018, both the brothers Malvinder Singh and Shivinder Singh in a joint statement had stepped down from the directorship of Fortis, and at that point in time there were no sort of cracks visible. It seems as though the recent developments with regards to RSSB also coming up in multiple articles has resulted in this sort of development from Shivinder Singh.
My God, thank you very much, Ekta, just for narrating the story. This is the most fascinating story. I don't think any film or fiction can be half as interesting as this story. Parvinder Singh's founding of Ranbaxy was a very proud moment for Indian entrepreneurs. in the 90s, like Anji Reddy. You know, we used to respect him a lot, but he also had a very bitter quarrel with his father, Bhai Mohan Singh. The family has been, and then of course after the death of Parvinder and the manner in which Ranbaxy came down, almost year after year in its esteem as a great Indian pharmaceutical company. And then the final sale and the way Religare went from weakness to weakness. It's a tragic story of ups and downs.
I think the final nail in the coffin was when Brian Tempest was asked to go and Malvinder Singh himself took over. I think that perhaps marked.
Absolutely, and Parvinder had set up that tradition of a professional CEO. Even that got broken, as you say, by the way Malvinder handled Ranbaxy towards the end. It's a tragic story, and I guess enough material to make a movie or write a book. But this is not the last we've heard about this family.
Okay, as they say, fact is stranger than fiction sometimes. All right, let's take a quick break on that note. Our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will join in next.